What's sentiment like on the ground over in Nigeria after your loss on Saturday?
Basically, the sentiment, I think, this morning is a bit upbeat. After 4 consecutive days of decline last week, we had a rebound on Friday, and I expect that to spill over to today. And basically, valuations are just attractive, prices have declined, and I expect bargain hunting from institutional investors to give the market a support today.
So no dent to that kind of sentiment coming through from Nigeria's loss to Argentina on Saturday?
Not particularly, Alishia. But I think, we'll see the optimism going through today to tomorrow, but I still expect profit taking to come in later in the week. Sentiment is still a bit fragile. You see investors are still a bit cautious as there's this lack of conviction, really.
Yeah.
And you can see that from the traded value and volumes, really, on the exchange, that everybody is still staying on the sidelines and being cautious and only picking up bargains you see in the market as opposed to the whole market going through a rally.
Well, of course, we've been talking all through last week about this market waiting for triggers for this market to sustain some kind of upward trend. Moving forward, though, are there any risks on the radar that could well trigger a possible downturn?
Yeah, I see a lot of risk and headwinds in the horizon, really. The whole issue around the global financial market, which is basically coming from the sovereign, risk crisis, sovereign debt risk crisis, and I see that if we see a compounding effect of that in the global financial market, there's no way Nigeria is not really insulated from that. Foreign investors are going to take a flight from the Nigerian market, and we might see that affecting oil price and putting pressure on the balance of payment and also on the foreign exchange side. So when you have those sort of risks that are a bit contagious, you see it affecting emerging market like Nigeria. So that's the biggest risk I see, in the horizon for Nigeria. But in the absence of that, really, given that if, assuming that doesn't happen, then I see prices at this level a lot attractive. Given where we are right now and the upside I see from current levels. Well,
for now, let's go through then some of the valuations that are looking pretty attractive at this stage of the game. Specifically in the banking sector, it's currently trading at a forward PE of 8 times versus 9.5 times 2 weeks ago. What's your view on the banking space specifically?
Well, I think a lot of the banking stocks are still attractive, and when I say a lot of them, I mean those ones that don't have any, that are not under administration by the CBN. A lot of them are still trading below, their book value, and I see that as being attractive, really. Most banks that don't have any real issues, I don't see a lot of them being justified below book value. Given the sort of prospect we have for a lot of them. A lot of them still have capital adequacy well in excess of the regulatory minimum, and I still see growth prospects, really, when lending really when lending really starts in the Nigerian space. So I see a lot of value in that space, and some of them are as well overvalued, and those ones really, it's just a case of rotating to those that are built on the value. But on the average, I think Nigerian banks are still quite undervalued.
Some of these players, though, are still very dependent on that asset management company bill actually coming to the fore and being passed by the president himself. And one of those is Union Bank. We saw the bank out with full year numbers on Friday. What was the market reaction to those figures?
Well, market reaction was obviously negative, and then basically you've seen Union Bank increase its loss position from about 222 billion loss as at September, increasing it with about 60 billion to 282 billion, as at the end of December. 60 billion in a quarter loss is huge, and obviously shows that the problem with those troubled banks are still existing. They've not disappeared, and basically it's only at the mercy of the CBN asset management company, really, which is going to come, take away all those toxic assets, perhaps at the value be above what they're currently carrying them on their book value, and basically just need that to recapitalize them to a level that prepare them for an acquisition or a merger, with another firm.
On the flip side, we've got a bank like Access Bank really seeming to make a steady upward progress and enticing investors its way. It seems to be coming in as a pretty strong stock pick of late. What's the motivating forces behind Access Bank right now? What's giving it that fundamental support?
Well, I'll look at it from two angles, really, Alishia. First is that Access Bank is doing a lot to improve its position. Despite the fact that the bank is deleveraging and that's having a negative impact on an interest income, putting pressure on that, we'll still see margins improving significantly, and that's coming now from recoveries. The bank recovered about 14.2 billion right back in the first quarter of 2010. That's huge, and that was able to support its bottom line. And the bank's management has stated his effort to continue that for the rest of the year. Also, it plans to start increasing its lending, using the trade cycle. Really, it's a big bank in the trade finance, and obviously wants to use that, to increase its loan book going forward the rest of the year. Having said that, and looking at those, valuation really doesn't factor in all this, and I think it's quite mispriced right now. It's trading at about 0.8 times its book value, and I think that's cheap for Access Bank, and that's why you see a lot of attention on assets at this point.
Well, let's take a look then at another sector. I mean, the food and beverages space has declined from a PE of 16 times from 19 times 2 weeks ago. What kind of value in your books does this sector present at the moment?
Well, I think the food and beverage sector really, it's quite diversified even within that sector really. For those that are focused on the consumer staple segment, I think there's a lot of value there. The likes of Nestle, Dangote Sugar, that produce things that are ordinarily price inelastic really. So really I see those ones increasing their market share, still building their business, and earnings growth in those ones still growing significantly in the near term. So I still see a lot of opportunities in that. Nigeria is a population with about 150 million people that consume a lot. So I still see a lot of prospects for those that increase their capacity to serve this market.
Well,
so I still a lot of prospects in that area.
Well, certainly Nestle Nigeria, according to a report out of Stanbic IBTC, seems to be trading at a significant discounts to their trading target prices, with expected returns of 41% this year. In the meantime, we've got a top sell call for the week coming in as Nigerian Bottling Company with an expected return of negative 20%. So prospects aren't looking bright all round. What's your view on Nigerian Bottling Company?
Well, for us, Nigerian Bottling Company, the main issue we have right now is the pricing, really. We feel the company is suffering a bit on the issue of cost. Imported raw materials are a bit costly for them right now, given the global rally in commodity in the past 1 year, and that's really having a pass-through effect to its bottom line. So that's really putting a lot of pressure on Nigerian Bottling Company. And obviously, the valuation is not reflecting that. So I feel it's slightly overvalued at this point.